afternoon, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, September the 2nd, 2025. Hope everybody had a really good Labor Day weekend, even those of you, many of our members of our program that are outside of the United States. I hope you just enjoyed a weekend off from trading, an extra day off with no markets to have to look at, although there was plenty of news to look at, no question about that. Sometimes it's nice to just have that extra day where we're not having to pay attention to the markets in any way. I am recording this with about an hour and 20 minutes left before the close of the market. And I'm recording this early for a couple of reasons. Number one, I've normally on a Monday, if this was a Monday, first day of the trading week, I would have no evening commitments of any kind, but it's a Tuesday and I had made some plans some time ago for some Tuesday evening commitments. So I need to get this done a little bit earlier and get some other things done and be able to get out of here. I hope everybody takes a minute to listen to this. When I'm done recording this, I am going to send out an email. I am not going to send out a new trade today for the Signal newsletter or for the triple play trades. I am going to send, by the time you're getting this and seeing this online, I will send several adjustments for some of our collar trades. We have some collar trades with some expired puts. And we need to get puts back in place and reposition some covered calls. I'm going to get all that done in the next hour or two so that I have my afternoon and evening freed up. The reason I'm not going to send out a new trade today, and let me throw out with that, I am probably most likely going to send a new trade this week, both for the spread trade program as well as for the triple play program, probably 2 or 3 for the triple play program. I'm waiting because I really want to see what happens after today. This was as of the weekend when a federal court of appeals viewed, or what's the word I'm looking for? A federal court of appeals came in with a judgment against President Trump's tariffs, basically calling into question the legality of Trump imposing tariffs on other countries that threw the market into flux. Now, along with that, you've got September historically being the worst month of the markets, year in and year out. September and I believe May are considered the 2 worst months of the stock market. You hear the term sell in May, go away. And then September is just everybody coming back from summer, sort of repositioning, sort of, booking some profits, doing some other stuff. September just tends to be a rough month for the stock market historically. On a really bullish year, smaller gains than other months. On flat to bearish years, more bearish than other months. So that's not helping what's going on with the tariff situation. But the tariff situation and this federal court of appeals that ruled against Trump is the primary reason for this sell-off today. And it's, this is funny. I love these headlines sometimes. Dow falls on tariff worries and rising bond yields. Bond yields are going up because the market's going down in today, I believe, not the other way around. I think there's so little effort put into some of these headlines that they throw out there. Anyway, that's neither here nor there. I think it's just primarily the tariffs and the fact that September is a rough month to begin with. It's going to be interesting what happens with this tariff situation. I don't know. I'm not convinced that Congress should not be more involved and that maybe the president should not have the power to do everything he's doing with the tariffs. But I'm also not convinced that judges and courts should be stepping in to the extent that they are, and I'm not positive where the answer is. I think Trump has proven a number of times now that he is able to use tariffs effectively. I think he's proven that the tariffs do not have the negative impact on the markets and the economy that all the naysayers claim they're going to have. But I don't love the idea of leaving Congress out of the process. I'm not so myopic and so one-sided in my politics that I think it's okay for a Republican president that I like to be able to do something, and then I'm going to get upset if a Democrat president later on does the same thing, and I'm going to get all bent about it. I don't want things applied to one party and not the other. So I don't want to see Donald Trump do things just because I am in favor of his policies, and then be one of those people that would complain if a Democrat was doing it because I wasn't in favor of their policies. Or another Republican whose policies I didn't like. There have been Republicans whose policies I haven't liked, and I don't want them to be able to do things either if they shouldn't be doing them. So I'm not sure where all that is going to wash out. I have very mixed feelings on it, but it's the uncertainty that it creates. It's the uncertainty that it creates that is causing this sell-off today. I don't know that it would be an unhealthy thing in any way for the S&P to maybe pull back to something like the 6,050, 6,000 mark. That's a pretty good size pullback. That's not quite 10%, but a correction to the tune of close to 10% would not be, in my opinion, a horrible thing. If it got down as far as, the 5,900 range, I believe that would be pretty close to a 10% move down. And if that happened over the month of September, I don't know that it's a bad thing. I think it would reset things for a potentially really big fourth quarter. There's no guarantee of that, but I think, again, I think it might be kind of a healthy thing if it wasn't too chaotic a move down. What I hate to see is when these moves down are something like this, and then the volatility back and forth, and they make their way down like that. I would rather see kind of a steady, gradual move down. If that were approximately, and I'm not sure it is, but if that were approximately the 10% mark on the NASDAQ, I'd like to see it just move steadily down there. I'd like to see a move down there about equal to this move, up here like this, and then reset us for a really big October. Whether or not that can happen is hard to know because we've got jobs data coming out this week. The employment report for the month of August is going to come out this week. You're going to get the JOLTS news tomorrow. You're going to get ADP employment report on Thursday, and you're going to get the full employment report on Friday. Low numbers on any of those, even if they're in line with what the expectation is. The expectations, I'm sure, have been tamped down pretty dramatically. This is small on your screen, but this says the prior month was 104, and the consensus estimate is 68 new jobs on the ADP employment report. Even if that number came in at 68 or 69, the fact that it would be down that far from 104 the month before is going to be more fuel and more probability that the Fed cuts rates when they meet just a week later, a week and a half later. So the Fed meeting 2 weeks from tomorrow, they'll make a rate decision. And right now there's already, the markets are betting 91, almost 92% that the Fed is going to cut rates. A really robust employment report could flip that on its head and actually be bad for the markets. If the markets are starting to build in the possibility or probability of a rate cut, and then that probability got flipped on its head with a really, really positive jobs report, I think the markets would react very negatively to that. So I'm not hoping for a horrible jobs report, but I'm actually kind of hoping that it is. My hope is that the jobs report, when it comes in, is no worse than what the consensus estimate is. As long as it is close to that number, I don't want to see it dramatically worse just for the sake of an increased possibility of rate cuts. But as long as it doesn't come in a lot worse than that number, I'll feel pretty good about it, because I think the markets could react positively at that time to a rate cut. And then if we do get a rate cut on the 17th, that could change the outlook of the month of September. You could see a sell-off for a couple of weeks and then see things turn and go back up in the latter half of the month. So it's going to be a tricky month. It's going to be a volatile month. And it might make trading a little bit difficult. We're already coming out of kind of a difficult stretch. We've had some adjustments that are working out for us. The Nvidia adjustment worked really well. The Meta adjustment is dramatically lowering our loss on Meta. We're still probably going to take a loss. I'm going to send out an adjustment to Home Depot today. We're going to add short options to both sides of the Home Depot trade today. And then we got to do something with AMD as well. But the adjustments are helping, and in the case of Nvidia, I'm already out profitable on one of my Nvidia trades. Remember, I did two of them One with the 172.50 strike price as the short put strike, the other with the 170 strike as the short put strike. Both went in the money. The 172.50 one filled. So, and I'm forgetting briefly, I think that was the regular SOS spread trade one. The other one was the triple play trade. So anyway, going to be an interesting week. Be patient this week in new trades. I may come up with some really good new trades tomorrow. It may not be until Thursday or Friday. And there is an outside possibility that we just manage the open trades that we have and add new trades next week. And somewhere down the road, we'll have a week where there'll be a fourth or a fifth trade, or in the SOS case, the main SOS membership case, maybe a second trade on the same week. We'll make up for it and make sure you're getting plenty of things to pick from. But where we've got a few open trades that need to be worked on and adjusted, we'll kind of keep our focus there. But kind of keep the possibility open that we add new trades this week, or maybe we don't add new trades this week. And I know that's super ambiguous, and I don't say that to leave you hanging. I'm just letting you know I'm going to be really, really patient. I'm not going to try and force something. I'm not going to try and add something into the mix just for the sake of adding a new trade. I want to make sure it's the right trade and that it's a smart trade. And so we'll be kind of cautious in our approach on that. Couple of highlights today. Palantir is actually up a little bit. I'm still very bullish long-term on Palantir. PANW took a little bit of a hit today, but not too bad. CoreWeave is taking a 10% hit today, but man, you talk about a stock that has been volatile. CoreWeave keeps looking like it's going to move back up, and then it falters a little bit, and then I think CoreWeave may get stuck in this range until their next earnings, maybe somewhere in the 105 to 110 mark on the high side, maybe down as low as 85 on the low mark. I don't think they're going to go a lot farther down than that, but we'll see, and we'll adjust as appropriate. I'm still very long-term bullish on CoreWeave. Short-term, who knows, but long-term, I'm very bullish on them. So hang in there on that one. All right, I'm going to wrap this up. That's all I have for today. I'm again, no new trade for the Signal newsletter, no new trades for the triple play stuff today. I'm going to start working right now on a couple of adjustments, probably have those out to everybody before the market closes. And then we could still get some new trades this week. And tomorrow morning, 30 minutes after the market opens, I will be online live to do the podcast. All right. Thanks, everybody. Have a great rest of your Tuesday. We'll see you here live tomorrow morning, those of you that can join us. Thanks. Bye-bye.